Welcome to the MacMillan Report. I'm Marilyn Wilkes, your host, and our guest is Deborah Bräutigam, a leading expert on China in Africa and the Bernard L. Schwartz Professor of International Political Economy at Johns Hopkins University. Her teaching and research focus on international development strategies, governance, and foreign aid, and she regularly advises international agencies and governments on China-Africa economic engagement. Professor Bräutigam is the author of The Dragon's Gift, The Real Story of China in Africa, and Chinese Aid and African Development, Exporting Green Revolution. She is with us today because she is giving the annual Coca-Cola World Fund at Yale Lecturer at the MacMillan Center, and we are delighted to be able to talk with her about her new book, Will Africa Feed China? Welcome, Professor Bräutigam.
Thanks, Marilyn. It's great to be here.
So let's begin with the book. Tell us about it.
The book is called Will Africa Feed China? And it examines the conventional wisdom on what we think the Chinese are doing in Africa with regard to agricultural engagement. And I think that conventional wisdom really has 4 points. People think that the Chinese have acquired a large amount of land. They think that the Chinese government is leading this effort. They think that the purpose is to grow food to send back to China. And they think that they're sending a lot of Chinese farmers to do that.
Okay. So what led you to write the book?
Well, my first book was actually about Chinese agricultural engagement in Africa. That was one about Chinese aid and African development. So I wrote that book in the 1990s, and I've been following what the Chinese are doing for a long time. And it seemed to me that we were really getting a lot wrong on what they were doing and really misunderstanding it. And I kept seeing these headlines about what they were doing, and I kept saying to myself, this isn't accurate. And so I decided to dig into this more deeply. I had looked at the issue of agriculture in The Dragon's Gift. I had a couple of chapters on that. But it really needed a whole book to itself. And so it was fascinating to actually discover what the Chinese were doing in Africa and how little resemblance that bore to what we thought they were doing.
Interesting, interesting. So the Chinese have been in Africa for decades then at this point. Okay. So how did you do the methodology? What was the research that you did to write the book?
Well, I really had a head start because I first went to Africa to look at what the Chinese were doing in the rural areas in 1983. So I already had a lot of experience, and I knew a lot of cases of their foreign aid. And I also knew that over the years, many of those foreign aid projects had turned into investments because they were often done as state farms for African governments. So for this book, I worked with a team of people. I worked with students and colleagues who were also doing field work. And we basically did 3 things. First of all, we did what I call internet investigative sleuthing. And so this is a kind of forensic internet investigation where I and my students dig into cases online to try to find out what we can about them. And the second was we did field work. So we visited as many cases as we could of investments that had actually happened or those that had failed, and then tried to find out what had happened. And third, we looked very carefully at the Chinese government incentive structure. What were the policies? How did they go about trying to encourage investment, and what could we find out from that?
Okay. So what are some of the myths about China's agricultural interest in Africa? What are some of the big ones?
Well, let's take, for example, the idea that the Chinese have acquired large amounts of farmland in Africa. If the Chinese had actually acquired all of the farmland that people believe they have, out of all of the media stories and all of the examples that are out there, it would be about 6 million hectares. And this is huge. It's about 1% of all of the arable land in Africa. So it's quite a lot of land. And we found by looking into 60 cases, which we had collected from all different sources and trying to find out what actually happened in each of those, that the amount of land that's been transferred to Chinese companies is around 240,000 hectares, which is about twice the size of New York City. So it's a lot less land than people think.
Right. Do you have any idea as to why these myths come about, this one in particular?
I think the idea that Africa might be feeding China, this is not something that people that really know Africa probably believe, because Africa is a big food deficit region. Every year, for example, they're importing about 10 million tons of rice. So that's an enormous amount, $5 to $6 billion. they, by and large, most countries are food deficit. And so the idea that they would be feeding China when they can't feed themselves is very unrealistic.
Right.
However, I do think people that don't know that might look at the amount of land that people have in China, very little, the amount of people they have there, very many, and then Africa seems to be a vast area with a lot of land. And so it seems like a natural that the Chinese would want to grow their food there.
Right, so they're just basically making up stories that are not true.
Well, they're doing things like they're looking at a Chinese company comes and they inquire about getting some land. I'll give you one example. In Zambia, there was a real project, at least they wanted it to be a project. A Chinese company came, they asked about doing a very large project that would have been biofuels. And then this was reported as though the Chinese government had come and had asked for land to grow food to send back to China. And the whole idea of this project was going to be to grow biofuels, which could be turned into fuel, and that they would sell this to the Zambians, because Zambia was putting in a requirement that they have a certain percentage of ethanol in their fuel. And so this company thought they could supply that.
Right, right.
So it was the intention of what the company wanted, and the way it was spun when it got into the media were entirely different.
Interesting. So tell us about some other myths.
Well, another myth is that Africa is actually exporting food to China already. We looked at the trade data in order to figure this one out. And what we found is that there are a lot of agricultural exports coming from Africa, but by and large it's things like tobacco, it's cotton, it's things that are going into industrial production like rubber. There is one food commodity that's in the top 5, and that's sesame seeds.
Really?
So I don't think that one could say that Chinese have a voracious appetite for African sesame. They're trying to lock that up so that they can feed themselves with it. But sesame is a very competitive crop in Africa, and the Chinese have come there to buy it. So they're buying it from African farmers.
Right, right. And again, you know, I am curious how these myths happen, and it's just basically reporting that's not quite accurate. Yes? Is that what it amounts to? I mean,
I think we developed a preconceived idea that this would be what the Chinese would want to do. Even though they hadn't said they would want to do that, they were not sending companies to do it. The main examples of investor interest that we found were in things like rubber or oil palm, biofuels. It wasn't in growing food, and it certainly wasn't in growing food to send back to China. So we were, a lot of the interest in what the Chinese were doing crystallized during the last food security, when global prices were rising very sharply around 2008. And so because there was a lot of investor interest in acquiring land, because it looked as though it was becoming more valuable, and then people worried about food security, and they thought that the Chinese were getting quite worried about food security. So these things came together, and they just interpreted investor interest from China as being about food security.
interesting. Okay. And is China in virtually every African country, or just specific ones?
If you're talking about China as an investor or China as a aid partner, they're just about everywhere.
Okay.
As an investor, as where their companies are seeking business, they're really everywhere, even in places like Somalia. If you're talking about diplomatically, there are 3 countries that still recognize Taiwan, so there's no Chinese government presence there. But in terms of Chinese companies bidding on infrastructure projects, they're really interested in getting that business all over the continent.
Right, right. And how is Africa responding to China's presence there? Are they liking it? Are there issues?
Marilyn, it's hard to summarize how
Okay.
54 countries feel about China. But we do have some public opinion data on that. And so there are a number of groups, including the BBC and Afrobarometer and the Pew Charitable Trust does a survey on public opinion. And what we can see from that is that the opinion about the Chinese it varies country by country. In some countries it's quite positive, others it's less so. South Africa, for example, it's very negative. And then we compare this with the United States. And what's interesting is that on average, the public opinion is very similar. And we're more popular, the US is more popular than the Chinese, but in general, on average, across the continent, both China and the United States are regarded favorably.
Right.
And so I think with China, the main concern tends to be not so much about the Chinese sending farmers there, because they aren't actually doing that, but it's about labor relations. And this is the thing I hear most. Whether it's agriculture or mining or manufacturing, Africans are concerned about the treatment that they get from Chinese investors who have very different cultural expectations. So that's a real blot on the Chinese in Africa. It's a problem. It's a challenge. And there are others as well. The environment is another issue I hear about. But on the other hand, people are really positive about the infrastructure that's being built by Chinese companies. So there are good things and there are challenges, I'd say, in this relationship. And it's growing very, very rapidly.
Right. Okay, any other myths you'd like to tell us about?
I think the last one that is really interesting is this idea that China is sending 1 million farmers to grow food in Africa. And I've seen this in several different ways. I've even seen it said to be 100 million that they want to send to Africa. And so again, there's this idea of so many people and so much land in Africa that's available. And what we found, which is interesting, is that the small-scale farmers, and there are small-scale farmers from China growing food and other crops in Africa, almost totally for local markets. They're supplying Chinese restaurants. They're supplying some African markets. You can now buy Chinese vegetables in many African markets, things that you couldn't buy before. But these are not Chinese farmers, actually. They are Chinese entrepreneurs that have looked at farming as a profitable niche investment that they could make. And so very few, if any of them, actually come from a farming background in China. Instead, they're businessmen.
Interesting. All right, let's talk realities now.
Realities.
What are some of the realities of China being in Africa, other than the ones that you've already pointed out?
Well, there are many realities. I think trade is part of the reality, and this is something that in the U.S. we look at with some concern, because our export market in Africa it's complementary right now with China's export market, but it's relatively small. For example, I think we're exporting about 60, 70 billion or so. Maybe even less. So our total trade is probably under 100 million. And so exports will probably be less. But Chinese exports and Chinese trade with Africa is right now about $220 billion annually. So they're by far the largest bilateral trading partner for the continent. And they're exporting a lot. And one of the things they're exporting is manufactured goods. So in many African countries, another area of tension is that Chinese goods coming in compete with local manufactured goods. So in South Africa, that's very much the case. We also see this in Egypt and in Nigeria in particular. So people that work in factories in those countries are concerned about having to compete with the Chinese. And this is going to be even tougher because recently the Chinese devalued their currency, and so that makes their exports even more competitive and harder to compete with.
Do you think the African government will step in and sanction some of them?
Well, this is interesting, Marilyn, because during the 1980s and 1990s, African countries were asked by the World Bank and the IMF to liberalize their trade markets. And so they have. They've opened their borders to imports from outside. And now they're finding that it's the Chinese that are supplying those imports. That wasn't quite what the intention was, perhaps. But we have this idea that free trade is always best. At least that's the Washington consensus, where I come from in Washington. And it becomes very difficult to industrialize if you have to open your borders to imports. So how do you actually move up the value chain and get your factories to be able to produce if they have no protection or very little protection? So I think what's happening somewhat in Africa is that they're starting to rethink this whole idea of free trade and to wonder how can they protect their industries from China and then try to move up the value chain that way. And I think that's a very interesting conversation that's ongoing.
Okay. And what do you think the trend will be for China and Africa moving forward? Any predictions?
I do have some predictions. I do think it's going to be leveling off. The intense interest that we saw, particularly from about 2004 to about 2009. I looked at the trade figures recently, and trade was growing at over 40% annually during that period. So that's a huge increase.
It is.
And then from 2009 to 2014, 2014, trade grew at under 15% per year. So that's a big settling down. And so I think that kind of settling down will be the trend in the future. We're not going to see those huge increases that we saw about 10 years ago.
And why do you think it's settling down? Just because there's more goods in the country at this point? People aren't buying them? What do you think is the rationale for that?
It will settle down for two reasons. One is that African economies are also growing more slowly, and so that means that they have less ability to import things from China. So that consumption side will slow down. And on the side of the Chinese, their economy is also slowing, and so they have less need for the commodities that they've been importing from Africa. So that trade will slow down as well. And then when you have less need, that's less price pressure. And so the prices of all those commodities will slow, which means the total value of the trade will slow. And we already see this happening.
Okay. And in what do you conclude in your book?
I conclude, maybe surprisingly, given everything I've said today, but I do think that Africa should feed China. It's not at present. I don't see it happening in the foreseeable future. But the fact that they have so much land that is not being productively used, the fact that so many parts of the continent have not yet really adopted commercial agriculture, I do think there are things they could learn from the way the Chinese invited in foreign investment into their own agricultural sector. And there are a lot of examples of that in my book. But I also saw in my research that in the past, some parts of Africa had exported quite a bit. For example, Zimbabwe, before they had this disastrous land reform, they used to export to Asia, to Indonesia, Malaysia, Japan, and even to China. So they were the breadbasket of southern Africa, and I think that could happen again, possibly. It's a challenge to get agricultural development going and to commercialize it.
Why is it a challenge?
Because right now, in many parts of the continent, you have subsistence agriculture. You have basically regions where capitalism has hardly entered. And so people are producing for their own families and maybe a little bit extra for the market. And the land is not being used efficiently. And yet these are people with very real needs, very poor people, and taking their land away, which is what's happened everywhere else in the world, that this kind of subsistence farming doesn't exist in very many places anymore. This is a very painful transition. So everyone wants, at least well-meaning people want to make this to be less painful, and they want to help these small farmers to move up the value chain. My own view on that is that some areas this might work, but in a lot of parts of the continent it's unrealistic. The small farmers are not going to be the future in many parts of Africa. They're going to move to the cities. They're going to look for jobs there, and they will have to commercialize on a larger scale. But this is still very controversial. And I don't think it's been accepted by a lot of Africa's partners, as well as by a lot of Africans themselves.
Okay. Very interesting. Thank you so much for being here with us today and sharing some of your work.
It's been a pleasure. Thank you for having me.
For more information about Professor Bräutigam and her research, please visit our website at macmillanreport.yale.edu. Be sure to join us again for another episode of the MacMillan Report, made possible through funding from the Whitney and Betty MacMillan Center for International and Area Studies at Yale.